This month has been a little exciting in terms of volume, and not as much of tech and M&A for all our listeners here today. But it's interesting because you can see a lot of momentum in consumer brands and D2C VCs across the entire spectrum of seed, micro VC, and seed to all the way to like late stage investments. And this augurs well. There's a lot more news coming in terms of acquisitions of smaller brands by some of the larger, FMCG houses. So we'll have a bunch of those covered and a handful of other small M&As. We don't have any large M&A for June, but we have volumes, as I said. So we're going to cover 6 M&As very quickly. One is Now Spirits, and you won't know the company name, but you might recognize the underlying spirits by Diageo. Shrestha Natural Bioproducts under the brand 24 Mantra, which ITC picked up. Fintelix, which ICRA picked up. Smash Entertainment in Nazara. Dice acquired by Zaggle Prepaid Ocean Services. And GeoIQ by Lenskart. So let's go and dig a little deeper into all of these 6 M&As. So Now Spirits actually might not be recognizable, but guess what? They are the guys who make these craft gin brands in India called Greater Than and Hapusa. Both, I think, Goa-centric. If you folks have partied in Goa, you might have tried these. And if you're a lover of gin, you might have tried these. But clearly, it shows that Diageo, a global giant, is willing to buy locally home-crafted brands in niche products and basically move up the value chain in terms of premiumization. It's one of the fastest-growing markets, as everyone knows, India. And so clearly, we're seeing Diageo make big moves on this front. And people always wonder, why do big brands have to come and buy these smaller ones? Overnight, the distribution network, the warehousing synergies, the retailer margins, the distributor margins, everything just expands dramatically when you go and sit inside a very large company's portfolio. And essentially, the large companies is getting phenomenal economies of scope and scale and being able to serve more customers with the same sort of distribution network and logistics network. From what we know, the total consideration was about 110 crores. There was strong double-digit growth, I think, in these 2 brands. We don't know the exact revenues, but I think Diageo plans to integrate the brands into its supply chain, its production, and expand geographic reach massively, which is what the challenge for some of these craft brands is. By the time they establish reach, it takes a very long time. But if they've shown that there is enough appeal that they've grown to close to 100 crores, we're seeing this in consumer brands acquired by Unilever and Marico and Emami, and now we're seeing it in spirits as well. So that was an interesting one for lovers of gin and tracking niche alcohol. The second was even larger, a company called Shrestha Natural Bioproducts. It runs this brand called 24 Mantra Organic. And from what is reported, ITC picked it up for 472.5 crores. And the idea is to, in their words, be a future-ready FMCG portfolio. So what do the upwardly mobile want to buy? Organic foods and essentially health-oriented sort of foods, which is what this brand stands for. They have 100 SKUs across groceries, spices, edible oils, beverages. 50% of their business supposedly exports. So suddenly ITC moves up beyond branded staples, which is what they're well known for, and moves into this territory of slightly more premium brands, catering to a different customer who's moving up the value chain. From, again, what we know, ITC at least has close to 400,000 retail touch points, and suddenly this brand gets exposure to massive distribution. But the organic sourcing network and the farm partnerships that the acquiree Shrestha has suddenly flow into ITC. So that was the second. ICRA. So ICRA, for folks who don't know, is a credit rating agency, and they acquired a risk analytics platform called Fintelix. And the reported value is approximately $26 million. And idea is to now move to a little bit more data-driven risk technology assessment. There's a lot more regulatory and compliance demands in India. And so essentially this allows ICRA to, I think, better compete with CRISIL and other global rating guys like, S&P and all of these other guys. So the competition there is stiff, but also a very lucrative business. Once you have, into a customer, you can go really deep and mine that customer. So this is it shows that it's a buy versus build decision. Essentially, if you have to go build all these competencies yourself, you would have to get a high-skilled team in tech and build it through an R&D mechanism. Whereas you've actually chosen to go and acquire something where the company is early stage, is growing well, and then can add a lot more value to its 2,000 plus pro corporate client base, and you can develop new set of products under the ICRA umbrella. Actually, there's a common theme for all of our acquisition stories today, but I'll come to that at the end. For folks who love playing in these theme like bowling alleys and go-karting sort of arenas, you must, and if you live in Bombay, I would be very surprised if you haven't experienced Smash Entertainment. So Smash was actually, I have a bizarrely unique connection to Smash. It was started by Shripal Morarkar, who was also the owner of SSKI and Sher Khan back in pre-2010. And SSKI was my first job back in India when I came back to India from the US. So he was actually my Uber boss. And when he sold those businesses to IDFC and Sher Khan got sold to private equity guys, he actually went and took this passionate venture called Smash, brought Sachin Tendulkar as a brand ambassador, and it essentially was like outdoor arena arcade sports basically, and very popular. I've gone for birthday parties and for kids' birthday parties and adult birthday parties, and very popular in Bombay. Sadly for them, it was COVID that brought them to their knees, because essentially it's a proximity entertainment offline business, and it kind of collapsed under the pressure of just not having revenues for a very long time. So a lot of people had said Smash is dead, it's bankrupt, but somehow it was alive. I don't know the details of how it was kept alive. But Nazara, which is a public company and has been one of the craziest acquirers out there. If you go and see Nazara's track record, we have seen it acquire business called Hobby Hub, Sportskeeda in digital media, NextWave. All these are recent, and they've bought a lot more businesses. So Nazara's playbook seems to be, how do I cater to the same customer base by acquiring and building more properties for them? And this is unique that in the sense that they've gotten into offline as well right now. So this suddenly gives them access to go-karting, bowling, interactive sports simulators, virtual reality. All of this is what they get in the offline, and then complements probably and helps them take these offerings to their digital gamers and bring the digital gamers offline when they need a break from digital gaming. So from, again, what we understand, I think that there was massive debt. So there's 400 crores plus of creditors using Smash from what we read. And they're trying to settle that with a 115 crore kind of settlement, put 10 crores of equity. Pre-COVID, this was 11 plus centers. I don't know how many they have right now, but basically it will rebrand it, get rid of the history. We're talking about a new brand called Zoreco, create all these centers and basically probably take it nationwide, because it was still a very localized few city business before the pandemic. So that was Smash. There's a little bit of history there, as I said, for me as well. The penultimate one for this month is Dice Enterprises got acquired by Zaggle for a total of 14.7 million, about 123 crores. Basically, Dice is a SaaS spend management firm, covers travel, procurement, accounts payable automation. And so Zaggle, by buying into it and trying to be a one-step fintech solution for corporates, will now try and compete with Khatabook and Swipe, etc. is our read, and this allows them a foot in the door in trying to deepen the enterprise engagement. And from what we know, the transaction is a cash. Within 90 days, it should conclude. We don't know the revenue and margins specifically, but we think the Zaggle team will be able to integrate Dice's platform, the team, APIs, and then cross-sell with their solutions. So these are all, if you see top to bottom, there's a classic mix of, old school adjacencies in buying assets that fit better into the portfolio and becoming arguably revenue accretive and getting distribution muscle. So this has been kind of the theme of June before we get to the last one. And the other thing, if you notice, is almost all of these are between that, 10, 15 million enterprise value all the way till about $50-60 million of enterprise value. So I think India is a market where there is a bite size and an appetite for these kind of acquisitions, because people can digest it, their balance sheets can digest it, They're looking at companies which can predominantly be value accretive, revenue accretive, profit accretive, and those tend to have the most attractiveness in this acquisition market, especially if you expect to be paid fully in cash, and which seems to be the dominant theme for June. The last one is something that we used to recently. I think we discussed it in the Bloom team on what retail tech is emerging, and there was a company that hit our radar called GeoIQ, and we knew Lenskart was a small investor. And now suddenly we get the news in June that Lenskart actually moved to acquire a majority stake in GeoIQ, valuing it at about 15 to 20 million. So obviously they want to keep it captive. They love the tech. Basically, it goes to turbocharge its data-driven store expansion. There's an old epithet in retail, which basically says what matters in retail, and they say location, location, location. And so clearly Piyush of Lenskart believes in that. He's bought the location business, location tech business, and gotten deeper. And there's this phenomenal piece from almost 20 years ago that I read about Howard Schultz and Starbucks. And Starbucks was so aggressive in cornering out its competition using location as a strategy that one of the most important people in the Starbucks empire is the guy who figures out the retail locations. Places in Washington, D.C., in San Francisco, where within a few square blocks, you'll find multiple Starbucks because the competition has come and they'll try to crowd out the competition, semi-cannibalize their own revenue, but really kill the competition. So it's an aggressive offline strategy. Who would have thought 10 years ago that Lenskart would be like the dominant offline player as well? And clearly they have strong belief in it. From what little we've heard, very large numbers, 75, 80, 90% of the customers actually come test the glasses and buy offline. So it's not like a repeat customer can try on the app and see what fits best on the app. But most of these folks actually want to test this out in person. And essentially, GeoIQ should propel that much further. So it was a small business. Operating revenues 0.7 crores, FY24. Must have grown in FY25. We don't have those numbers. But it allows for Lenskart to become even more focused on offline, hyperlocal, fitting the stores and having a data-driven approach to this. And if you know, Lenskart bought a brand called Owndays for global expansion. They themselves are there. If you go to Singapore and if you go to Dubai, you'll see Lenskart stores, you'll see Owndays stores. So this is not stopping with India. I think this is a technology buy that will allow them to become an Asia player, if not a global player. So bold directional move by Lenskart, which wraps up our rather extensive 6-company kind of breakdown for June. So been a busy month, nothing massive. I wouldn't be surprised if we see more of those later this year. But the M&A, clearly people are trying to grow inorganically, and we've had like a variety of interesting buyers. Diageo, ITC in consumer brands, Nazara in gaming, ICRA and Zaggle in software, and Lenskart in classic, what was thought to be e-commerce, but essentially has become a retail plus, a commerce giant in a single vertical.